All right. Hello, everyone. Welcome to today's weekly market check-in with myself, Greta Wall. I'm your host, and I'm joined by David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Topic today is PCE prep and new tariffs. It's a whole bunch of market drama happening out there. This market is the tough one out there, David. So Thursday, how's your Thursday going to start off? And then we'll get into some market discussion.
Really good day. No complaints today.
All right. So obviously the most recent news for the stock market is Trump's new tariffs on automakers, all foreign-made autos. But of course, the big three, the U.S. automakers have a lot of parts that come from foreign-made. It's a mess. So the market is obviously trying to figure out how that's going to impact companies like GM, Ford, etc. What's been your read on the market reaction to that move so far and how it might read through to the April 2nd deadline next week?
My read through is that first it was telegraphed quite a bit. So in terms of market response, I thought there might be a buying opportunity today as we talked about it ad nauseum all day yesterday as we awaited for the official announcement. And often when people hear about something over and over and over, and then it finally comes out and he has the press conference, which was like an hour or two late. We've had so much time to ruminate on it that the predominant kind of thought is to go the opposite way. So my plan was, the market responds to this even more. There'll be a great buying opportunity in the market for a short-term trade. Beyond that, it was, hey, whether real or not, because Elon himself has on Twitter said, hey, tariffs do affect us. It's not like we escape the issues. I do believe the market's very comfortable in saying Tesla wins here long-term and they're better off than companies like GM specifically. So thus why Tesla is traded well. It almost doesn't matter if it comes to pass and it's true. For now, the market's going with that narrative, and narrative wins short term. So Tesla has been, a big win. It's a long of mine, and it's up a lot today, although it's finally tired out and pulled back again. But it's, hey, okay, short term, maybe Tesla's who benefits the most or at least gets hurt the least. And the market has had so much time to think about this all day yesterday as we awaited that maybe there'll be a cute buy. And today into that down move, we were buyers, not sellers. And that's as much as I'm thinking about it for right now.
This tariff news comes, of course, before the April 2nd deadline for the reciprocal tariffs that Trump has spoken a lot about. He's been kind of wishy-washy on how hardcore they're going to be, saying we can do some pre-negotiating and maybe they won't be so bad for some of these countries. But the auto tariffs were talked about, and then really did actually go into effect. So does that give the market, yourself as a trader, more oomph that, the April 2nd tariffs are going to be real because these auto tariffs were real?
No, I'll tell you why.
Okay.
I think auto tariffs are like a fait accompli. I think a lot of the market understood this was happening. Where reciprocal tariffs and how they're going to work are a lot about how some of these countries respond, right? They still have time to respond, not a lot of time, but still some time. And even when they happen, they can respond. So I think it's a little bit more play by ear where this automotive situation is a bit different. Now, I think everyone now understands he's serious about tariffs. He's not bluffing, but he's certainly willing to push and pull. Oh, they're not responding and they're not taking me seriously. I'm not pulling back. Oh, they're willing to talk to us and not take advantage of us the way I thought they were taking advantage of. I'm going to be less harsh on these reciprocal tariffs. So I do think it's fluid and we should expect it's going to happen. But how other countries respond to it is going to partially determine how far he goes.
All right, David, when we look back on this week, it's been a tough week for trading. I've listened to you several times tell the room, there's not much I like here. There's not much to do here over the past 2 days. I think today definitely a bit more of an active day for idea flow. But in these times in the market when it's hard to find ideas, what do you fall back on in your philosophy, your plan, your strategy, your rules for yourself so you're not over trading a market that is just kind of meh?
Out of fairness, the oddest thing is yesterday was a great day also, and we did a lot, and today was as well.
Yeah,
But here's what I do is I go through my work in the morning, charts and, upgrades, downgrades, and topical news and what might be a setup long-term and short-term. And I'll say there's not much. And what I basically say is, but I'm open-minded. If something changes, if something tells me there is a setup that's, I don't know, A plus, B minus, something like that, then I'm open-minded. And it's to, in the meantime, force myself and anyone who follows my work to ask themselves before they buy or short something, what is my plan here? Like, why am I doing this? Not just to do it, to really say, what is my edge here? Is my reward bigger than my risk? And am I doing something because I'm bored, or is this set up for real? And that's probably the best thing you could do, is constantly ask yourself, why am I doing this trade, and have a plan. And very often you'll catch yourself saying, oh, I think I was doing this to keep myself busy, not because I have an edge. And then if you ask yourself that, you also can determine, wait, I believe in this. Like, I have a real edge here. Semis are breaking down. NVIDIA is going to break down. I should be short the market, or at least NVIDIA, and do it. So example, yesterday, NVIDIA was really on watch for a breakdown. Although it's a favorite of mine and probably drives more than 50% of the profits in her circle the last few years. Recently, I'm flat into 120 and just haven't liked it. I said, I'm thinking it could break down. People, everyone's addicted to NVIDIA. So there were many questions. Should I buy it? Should I buy it? And I was like, yeah, it's whether you should short it or not. Anyhow, yesterday, given the news out of China, I said, it doesn't really matter if it's real. It's the narrative. It's how poorly Coreweave looks into the IPO that tells me this is probably ripe for breaking down. If it can't hold 117, there could really be a flood of sell orders. And then I looked at that and simply said, NVIDIA is breaking down. That means the semis are breaking down. The semis are the engine to NASDAQ. I've been waiting to short the Qs. We're very long. And now into this 493, 494 near the 200-day. I said, if anything, we're looking to get short. I really don't think there's much further to go. So here's what I did. I didn't plan on having to be short the Qs or NASDAQ, but the minute I looked at what NVIDIA and semis were doing, I said, I got to get short. How do I create alpha now, since I'm not short in size? And I said, you know what? I think it's going to work today. And I bought Q puts, 292s that expired yesterday. So took some extra risk because they're short term, but I got the alpha because of it. So it's really just being open-minded, waiting till a setup occurs. And if a setup occurs, swing in the back. And it's so choppy, there are less setups, but doesn't mean they're not good ones. This morning, I had the same sort of situation with another trading vehicle, the Qs. So I'm just doing less, waiting for my spots, and then they're paying. They're paying pretty well. Just doing a little less in between.
All right. When we started, we got a question from Itz, who is a watcher of all of our T3 content. Hello, Itz. Thanks for coming. He wants to know your thoughts on AZO and that's AutoZone. And of course, impacted by some of the auto tariffs, possibly, at an all-time high today, $3,800 stock. Do you have any thoughts on AutoZone?
Sure. So I backed Vroom, which is like the loser in the automotive category. It was a huge win for us early on, but obviously hasn't done well. So I can tell you that a lot of people predominantly think, well, wait a second, like used cars, and anything that has to do with them, that's a winner. Some of these guys are going to win and win big when it comes to used cars early on, because pricing is probably going to go higher. But ultimately, some of these, AutoZone specifically, I don't really trade. But the way people look at Carvana and say, oh, this could benefit, it actually becomes more of a problem. If the used car market sees inflation again and pricing gets out of whack, that's their core business, right? And that means their cost of goods is going to skyrocket. So as opposed to what many people believe is that, higher prices in the used car market are going to happen due to tariffs. Well, that doesn't help some of these used car sellers, because their major source of revenue, cars, their acquisition costs go, sky high. So are they going to be able to pass it off to the consumer as much, because prices are already going higher? So the point is, I think this is a near-term reaction. Some of these won't benefit long-term the way people think. AutoZone, I'm just less, I get it. You know, I understand why it's working, but less interesting to me and not something I focus on day to day.
Yeah, definitely. Just want to get your opinion. Okay, you mentioned Coreweave and the IPO. I want to get your opinion on the IPO. You know, Nvidia is involved here, obviously. What are your thoughts?
Let's just cut to the chase. So it's a disaster,
Yeah,
right?
right.
So this is an IPO that so many people have been waiting on. Not only was it expected to be a hot deal, sorry, my nose itches, but it also touches upon so much of what the bull market relied upon, right? Power, data centers, AI. It's the backdrop to that theme. It's obviously so connected to NVIDIA. And here we are, the deal's finally happening. And let's face it, it's a dud already. And there were some big nerves the last few days. And then you have someone like David Faber on CNBC talk about how the book looks, and he put a fork in it, right? Everyone's listening to him. Anyone who wasn't nervous is now nervous. So it's not looking good. Now, can they, you know, lower the pricing of the deal, lower the amount of shares, and maybe make it less of a horror show? Sure. But in my experience, which is, you know, I'm not Warren Buffett. Well, that's a bad example, but I'm not around for 50 years, but I'm around for almost 30 years. And I've seen a lot. When you get a cloud like this over a deal, it ain't going away by tomorrow, right? It's pricing tonight for tomorrow. It's not like there's sunny skies tomorrow. That is not happening. So it's a big issue. So the issue becomes, how rainy does it get? Because the cloud's going to be there. And let me take you back to Meta. Meta was a disaster, right? And all of a sudden we saw people starting to get allocation retail that never should have got them. I had buddies who'd be like, you know, larger retail traders with big 7-figure accounts and be like, I was allocated 5,000 shares in Meta. And I said, do yourself a favor, buy as many S&P puts as you can, or just flip this like as quick as you can. This is a really bad sign. I'm not saying we're quite there yet the way we were with Meta, but it's some of the similarities. Hottest deal, everyone's excited for it. Little later in, you know, being a mature company, I get you, still growing crazy, but they're probably not going to keep growing at these crazy numbers. It relies so much upon Microsoft. Now everyone's really concerned. Wait, they make up 60% of the revenue, and Microsoft is now starting to lower spend. We don't have confirmation, but I mean, everyone read that, was it Cowan, whoever the note was from yesterday. So you have this huge cloud, and it's an issue. And by the way, it's an issue to MBIS. It's an issue to Core Scientific. It's an issue to NVIDIA. It's an issue to so many stocks that feed into the AI bull market. Am I calling a top and say the market's going to crash? No, but it's a major cloud. Let me remind you what happened with Meta and why I brought it up. The cloud remained and the stock went lower and the deal was a disaster. And then ultimately they were able to prove through fundamentals, which in essence were, hey, we're not a one-stop shop. You guys have decided we just do advertising. Everyone's on, you know, PCs, but mobile will be a huge business for us. But they had to kind of prove it out. Then a few months later, saw mobile was monstrous. Then we started to see numbers and the game changed, and all the questions were answered. CoreWeave's probably going to have to do the same thing. They're going to have to answer some questions via fundamentals, which, as we know, will take a few months to get to. But I'm reminded that it did present an amazing opportunity with Meta. And once people saw that they had the story wrong, that they were not behind on mobile, and that it would work just as well, and that advertising would be a bona fide, you know, bonanza for them via mobile, everyone switched and it was off to the races, and obviously never looked back till, you know, a few years later. So I'm not writing the company off, but boy, there's a huge cloud that will be there for the next few weeks. That's for damn sure.
This is the first one of very few IPOs in the past few years. The IPO space and SPACs were, you know, it felt like constant. You know,
these guys are a bunch of idiots. I don't know what the hell everyone's been doing. So, because I do, you know, some VC and definitely pay attention to these IPO markets. I have one I've been trying to get public for a year. That's late, and I pay attention. Now, it hasn't been good, but it's been a good market. If you need capital and you have decent numbers, you just convince the bankers, hey, it's a 2-year bull market. We can't assume the market's going up forever. Nvidia is going up every day. Maybe we should not like wait around. Maybe we should push this deal. Maybe everyone's not ready for it, but we should push it rather than throwing caution to the wind, assuming the market's going to go on forever. So my point is, what the hell everyone's doing now, filing deals when we're probably at the tail end of a bull run, is totally beyond me. I'm not saying that AI is going away or the market's having a massive correction, never going to new highs, but I am saying after 2 years of a straight up in the biggest bull theme we've seen in maybe a couple decades, what the hell were all these bankers doing for 2 goddamn years? Like they couldn't figure out to get a couple of these deals out, referring to Klarna and obviously Coreweave and some other one that's like a comp to Robinhood. Like where the hell were they for 2 years? I mean, it's their responsibility to go out and raise money when the market is taking Reddit to 200, not 100. So yeah, I have some strong thoughts on that.
Yeah. So you don't think this will reinvigorate the IPO market?
No, I think they're providing paper at the absolute worst time. And when everyone's getting picky and choosy and selling NVIDIA, offering them more paper is a really goddamn bad idea. Because already people want less paper. And by the way, the paper they're buying is in China and Germany and France and Argentina. And now they're like, oh, okay, I know you don't like NVIDIA, and it turns out you don't like Microsoft or Apple or KLA Instruments or JPM, but I got some for you for a company that's not going to earn money for the next 3 years, that's second best to a firm or whatever the hell it is. The point is, no, it's like the worst time. I get it. These companies need money. They see their window closing, so now they're jumping through it before it's closed, but it's totally, some people have screwed up here big time. And it's not bullish. It actually provides more competition for money when people have less interest in the market.
When you brought up the Coreweave IPO last week, you brought up Core Scientific, CORZ is the ticker. Do you still see an impact on Core Scientific with this IPO?
That NBIS and some of the auxiliary plays are definitely
in a positive way or a negative way?
Oh no, firmly a negative way. NBIS is at recent lows, and if it doesn't hold this level, where are we right now? We're at 24. If it doesn't hold here, we could be a $20 stock very quickly, right? Core Scientific's already been devastated, but could it be like if we have an implosion tomorrow, could it be a $6 stock? It truly could be. So a lot of these are they're a lot of their story. Like I'm not saying they don't have fundamentals and they don't have a reason to be in business. But I am going to say if Coreweave doesn't work, a lot of their narrative is not what it was yesterday. So it's as Coreweave goes, so do they for right now.
All right. I want to get your opinion on the housing market. You and I have talked about the housing market in the past. You're a little bit you see it a little differently than a lot of people out there and the future of the housing market. You were making some comments on it in Inner Circle last week as well. We're in this like really sticky spot with mortgage rates. They're not at highs, but they won't really drop past below 6.5. What's your read on the future?
Yeah. So a year to 2 years ago, I said, listen, I get it. Everyone's waiting on rates to come in, and rates are going to come in and housing is going to go higher. Yeah, it all sounds so cute and easy. Of course, rates come in, everyone buys houses. I said, I don't subscribe to that. I subscribe to the fact that there are all these corporate giants, right, out there, like private equity firms that bought a lot of these homes, and that their business plans got a little convoluted and they bought too many of them. And when everyone finds out Airbnb is not a simple way to make money, and you get all these monster private equity guys putting half of Florida on the market, middle Florida, non-ocean property, and you get people losing money in Airbnb, and the economy actually slows and people are making less money and they can't afford their second and third house because there's a lot of them. They don't necessarily use them as that. They're income producing properties, and rates don't back up enough. You know what eventually happens? Every second and third home gets put on the market. On top of it, there's this housing shortage. You know where the housing shortage is? It's not in Palm Beach, and it's not in Miami, and it's not in New York. It's in these small towns with $300,000 to $400,000 to $500,000 homes. But when it comes to $1 million and up, No, there was I don't want to call it a bubble, but there was a really bad dynamic built that I think has yet to unwind. And I can tell you factually that when Zillow sends me updates on old homes of mine in Palm Beach, and I see I sold it literally for $1.5 million less than it's worth today in 2020, I'm like, why can't housing come in more? I mean, literally, we are still not back to COVID pricing in a lot of areas. Housing's not, interest rates aren't backing up the way people thought. Everyone's worried about inflation being sticky as tariffs take hold. I think it's a bad situation, and I think it's going to get worse. Now, are there areas already hit hard, specifically in Texas, that saw massive growth? By the way, Palm Beach, which when you start to see softness there, I talked to a buddy in Inner Circle who's throwing his condo on the market. Literally a quote from his real estate agent: my listings just went up 48%. This is not a good situation. So when you start to see the high end be affected, it's going to trickle down. I am not bullish there. I do think it's got some ways to go in this correction. Now, if rates plummet, sure. But if rates plummet, it's going to be because tariffs destroy the economy. People are losing jobs, and it's not going to be such a strong housing market. So I get it. The population growth is much bigger than the housing growth. And there's that dynamic. But overall, for that dynamic to play out and keep housing prices higher forever, I don't subscribe to. Now, will housing bottom, meaning the stocks, I'm looking at them because they're over here. Will housing stocks bottom before the actual market bottom? Sure. So they'll be buyable eventually. But for right now, I'm bearish housing and the stocks. But there will be a buy coming up.
All right. And on the topic of interest rates and inflation, we are one day away from the PCE report. Tomorrow is the Fed's favorite inflation gauge, PCE price index. Not usually much of a market mover. The CPI is definitely the bigger market mover of the two inflation reports because we get that one earlier, and then the PCE is kind of like a follow-up.
Although it's
but is this week is going to be more? Yeah. Is this week going to be more in focus after
it's
last
the Fed's favorite gauge? I think. Okay, so where we stand with rates is pretty simple. Hey, we might only get one this year. Everyone's hoping two, but it might only be one. So what do you do from here? What do you do is you harp on every single report, right? CPI, PPI, PCE, GDP. I mean, they all become more important than they used to be. So they all will matter in a market that is desperate for enough of a slowdown with inflation and pricing to get more rate cuts, but not too much of a slowdown in the jobs market and the actual economy, so we don't have a recession, right? And these numbers take more importance because the Fed has basically told us, he tried to split the middle, but he's basically told us don't expect many rate cuts, and I'm data dependent. I mean, that's what he told us. So it'll be important. However, tomorrow, Coreweave's probably more important.
That is true. We get the Coreweave IPO and the PCE price index all in one day tomorrow. All right, we're coming up on Friday number 5. Will we get a 5th Friday rally in a row? We weren't expecting last week's, and then it just kind of right there at the end of the day, everything turned green. Is it possible to get a 5th Friday in a row where the market says, oh, we got to run it up here into the weekend?
Truth? No.
Of course it's possible,
idea.
but
I have like zero idea. Here's how I'm in this, just because it might help people.
Yeah.
I am using charts and analysis via the markets, right? News items to say this sets up okay. And I'm living day to day. I'm not particularly bullish the market. I certainly was much less bullish when we were about 10 points higher yesterday and put on shorts. Here, I'm still bearish, but much less so. So here's how I'm playing it. I said, okay, the Qs have a gap fill into 480. If you're short, that's where you're covering some shorts. We've had shorts like APP and SPX and Qs. My point is, and then I see a cute long, a cash flow long. Am I bullish the market? No. Am I bullish right here between 481 and 480 for a bounce probably back to resistance of 485? Sure. How do we make the most out of that? I don't know. Let's buy some TQQ and get that alpha because it's 3 times. So we buy a bunch of it. It goes to 485. I sell it. And that's how I'm living day to day. The good news is it's a trader's market. Then we continue higher in the 486s. I said, this isn't going to last. And I shorted the Qs in the 480, between 485.50 and 486.50, and then covered them like low 484. So as a trader, there's tons of opportunity and stuff to do, but I'm really hesitant. The market's done nothing. Underneath, we've had a lot of damage, right? We see tons of stocks down 40 and 50%. But the actual indices, this is like a walk in the park. So I'd love to see a retest of lows or maybe a bit lower. I've always subscribed to the fact that we probably don't make an ultimate bottom to the Qs or closer to something like under 460, 455, 460. But I'm open-minded to get long more things. Now, underneath that, last week I went long Kava. Got lucky today, added to the S&P 400. It's doing well. I'm not letting go of the last bit of hood I have. If you wrestle me and beat the hell out of me, I ain't giving you the last bit of shares I have because I'm pissed I sold any. And I can't wait till it goes down to buy it. So I'm not one size fits all. I'm bearish the market, but there are some special stories I will continue to get long.
To go with that, from X, somebody asked, what would make you bullish on the stock market besides seeing a crash down to 450 on the Qs?
A wonderful earnings season that I anticipate will be far less than wonderful because earnings are the lifeblood of stocks. So ultimately, we have earnings season beginning in just a couple of weeks with financials. Blockbuster earnings season where earnings go up and thus valuations down because the stock prices haven't moved. That'd make me more bullish to the market.
All right.
People keep forgetting. We do buy these things based on earnings. It's like a lot of times everyone's so focused on charts and tariffs, but no, earnings still matter the most.
Yes, definitely. All right. A comment we got, this is just a good comment we got from YouTube before you and I started here is DP equals savant. He is like E.F. Hutton. He speaks, I listen. David definitely has a lot of just great market knowledge to offer our listeners here, those members of the Inner Circle, subscribers to his Epic Trades newsletter. We've written a new ebook with David, and now we're launching a brand new newsletter with David. So you can go to t3live.com/DP to get David's brand new free newsletter. It's going to be sent out Tuesday mornings around 9 a.m. Eastern time, every single Tuesday, based on his morning call inside the Inner Circle. So get a bit of an inside look at David's game plan for the day, for the week, what he's looking at, etc. Again, that's on Tuesday mornings. It's a free newsletter, completely free every week. So you can go to t3live.com/DP to get that. It's called The Pulse. So here's just a screenshot from the room a few weeks ago. Thank you, DP, for your game plan. Way to keep us safe in an awful market and making us money. Easy to follow commentary. And that easy to follow commentary that most talk about in the room is the morning call and those levels and things that David is providing on a daily basis. So if you want some of that for free, you can go to t3live.com/DP to get his new newsletter. And that is what that will be based on. David, I'll let you get back to trading. Have a great Thursday, Friday, good weekend. I'll talk to you next week.
Have a great day, everyone. Thanks for joining.